Alright, welcome back guys. We are going to be discussing liquidity, and we're with the goal of sort of showing you guys how liquidity plays out in the market and illustrating sort of the line charts that we're showing you earlier on this chart. So obviously now we've got Euro USD and price is moving down. Where's my pen tool? Price is moving down. Then we've got some sort of a correction impulse, and then we have got a correction, right? So if we look right at this correction here, we have obvious and nice and beautiful trend line that's building up over there, and we've got some points also over there that give us a nice setup. So we've got two types of traders over here who are looking at this setup probably differently. Number one, we've got a trader who can see that this is an impulse and this is a correction, and they're waiting for the confirmation to continue with an impulse downwards. This is the first trader that we have. We've got a trader who's looking into this correction and saying, we've got a bounce over here, we've got a bounce over here, we've got a bounce over here, and then this bounce again may give us an opportunity to take price higher before I expect price to tank much later. For whatever reason, they may expect price to tank. Maybe they expect it to come back to this POI, or they expect it to come to a zone of resistance over here where they believe that price is going to reject, and then for whatever reason, they may be inclined to trade what's happening at this time. So this person is saying, okay, fine, I'm seeing all the evidence that this trend line has been dependable in the past, and I might as well buy it. There's no reason to look for sells. So this is what then happens, right? If we go to the 4-hour chart, and let's just make sure this is well sized up. So if we go to the 4-hour chart now, and we just look at this trade, we'll see what has just happened over here. So now we've got trend line liquidity that's being built up, right? With trend line liquidity that's been built up over here. So now for us who believe we understand how the market works, we say this is liquidity. And for us, we don't want to be buying here. So we might have seen price come out, break structure over here with a bullish break of structure. So we've got enough momentum. We believe price may come back, give us the retest, maybe at this last point over here where we've got a swing low before price pushes up, right, for whatever reason, right? So we may see this is a valid point of entry or a valid point of interest, right? But because of the trend line liquidity that's sitting here, we obviously don't want to be a part of that. So we're going to avoid that. Now look at what has just happened here. We've got price coming into the trend line, rejecting and giving the momentum to push to the upside. So for us, obviously, we're watching closely and waiting to see what's going to happen next, right? And look at what happens next, right? So you see price comes up, gives this inducement in the form of candlestick confirmations, and then we've got individuals who've got their stop losses. I don't know where they would have entered here, and I'm not good at this, but obviously they get stopped out with the goal of taking price higher, right? So yes, there have been some dudes who've been lucky a number of times. This trend line has been respected, and they've been making some sort of profit, if any, because price was really choppy in terms of how it was moving. But if they were involved in this trade, then they were in trouble. All right. So now these guys have suffered a loss, and this trend line liquidity has been manipulated. Inducement has already taken place. And then what do we see next? For the guy who was waiting with the pending order, the guy who was waiting for the breakout, he's already seen his breakout, right? So he sees this, he's like, I'm happy for this, price is moving my direction. So I don't know if people trade like this, but what I know people who trade patterns are advised to do is they're advised to work on a short pending order there, and probably they've got a stop loss over here, and they're advised to trade to this point. Now obviously this is bad risk to reward ratio for whatever reason, so I hope they're not trading like this, but I see this would be a good structural point that people would have put their stop losses, and they believe price is going to continue even lower, right? So what do we watch for now? For us, we're looking at this and we say this is now a break of structure, right? Now I have a bearish break of structure, and then for the other guys who trade patterns, they're advised to put their stop losses above the flag. I think this is the most textbook setup there is, and then they aim for whatever they aim for in terms of TP, maybe a 1 to 2 or something like that for their entries, right? So now we've got the guy who was trying to buy being taken out with this liquidity over here, and then we've got the guy who was willing to sell entering the trade, is in some nice money right now, and he's got stop loss placed above there, right? this is where they believe that price is gonna respect. Now let's watch what's going to happen with the price. So for us, we're saying obviously we expect that price is going to pull back into a zone of interest where we're going to be able to sell from, right? So let's wait for price to do that. Let's just remove this line, and I'm going to show you something of interest. So if you look over there, as you can see, we've got relatively equal highs over here. This looks like a double top where price rejected. Let me zoom over there. As you can see, so we've got something like a double top formation where price comes in, gives us a top, gives us an M, and then price tanks lower. So obviously for us now, what we would then be trying to see would be if we can use that area as a point of interest. Now let me just clear this up before it becomes too confusing. So what you can already see is this is horizontal liquidity. Why? Why is it horizontal liquidity now? Horizontal line liquidity, because chances are we've got stop losses hanging somewhere above there. All right. So obviously we don't want to use this swing point as our POI because it can easily get manipulated. We would rather look for POIs in here if we get our confirmations for entry. Now let's watch what price is going to do. Let's go back to our daily so that this thing moves a little quicker. Right, so let's just play. Well, now look at that. Let me just take that back. Now, the guy who had his stop loss over there, they enjoyed a bit of an impulse. If they did take profit anywhere lower than there, which I believe nobody takes a 1 to 1.35 risk reward trade, they didn't get what they were looking for. Maybe at best they got a 1 to 2, which would be perfect for them, and they'd be happy. The TP got hit. But if they use the textbook strategy, which I'm worried textbook strategies are the ones that give problems, then they had a big issue over there because they had a very big stop loss, and at the very minimum they would have been aiming for a 1 to 2 trade, which they would have expected to come somewhere there. Right, then for us, we know that with the POI, that would have expected to hold maybe somewhere there, and then would have had this POI, but we've declined to use this POI. Why? Because there's double top liquidity that's sitting over there, and it's not our sort of entry. It doesn't meet our entry criteria, so obviously we'd be waiting for a change of character over here in this zone, and we don't get that, so we don't get any signal to get into the trade. Now look what happens here. We've got a POI that's sitting over there, and we get price coming in, giving us what looks like a change of character there. Now let's just remove this thing over now to make it easier. Right, so we've got price coming in, giving us a high, a pullback, a high, a pullback, a high, and then we get what we're looking for. Our schematic is forming, and then we want to see price come here and then tank lower. Now, personally, we've got the schematic, but because the POI is resting on double top liquidity, I'm not interested in the trade, right? I'm not interested in the trade. So what am I going to do? I'm going to watch what's going to happen next and let the trade play out. So what you see now is you've got a strong impulse, but when price comes back, you're not getting that impulsive momentum. So you're only holding this trade hoping at some point it's going to impulse in your direction because it's giving you all the signal. But you see that the market maker is not taking price with you, and then it happens. And it eventually happens. So if you look over here, you see it take place. Price then comes up very, very forcefully and catches out the liquidity that's resting over here. Right, now mind you, with double top liquidity there, when people come in over here, support resistance traders, whatever you want to call it, as the POI guys who are trading maybe supply demand order blocks, whatever it is, we're all in here for this horizontal liquidity, and we're expecting price to move lower, and all we get is a corrective thing that's only telling us that we might have been induced at this point. It takes so long for price to tank, and then we see a very quick 2 candle move in 2 hours. We've been holding for crazy number of hours, but in 2 hours we're taken out, and then let's watch where price goes. And almost immediately we get the impulsive move downwards. Right, almost immediately we get the impulsive move downwards. Look at that. It's like so quick. Let me get rid of these funny drawings over there. Right, now look at that trade. People get manipulated, they lose out on the opportunity to make money simply because the market maker decides to take people out. Now let's go back to that guy. There's a guy we know, we aren't forgetting that guy. There's a guy who had taken this breakout over there. where was that trend line breakout? It was somewhere over there. And when they see the breakout, they take the breakout, and then their stop loss over there, right above these highs. They also get taken out. See, they also get taken out. They've seen some profits. The market comes back so impulsively, and then their 1 to 2 trade that they really wanted to see play out, and they had a very liberal stop loss, but still the market just fails to respect them, and their TP is hit, and they're wondering, how come I enter, as soon as I enter, market works me out? The guy at resistance is saying, how come when I enter, I get worked out and the price moves in my direction? So I hope this sort of illustrates what we're looking at when we're talking about liquidity in the markets, because now all of a sudden we see that everybody seems to be losing here. For us, if we're not mindful of liquidity, we're being taken out. This is why I always say liquidity needs to be understood by every trader, because it's not about smart money concepts. No, if you're trading support and resistance, you can trade that profitably if you are able to read zones where you are likely to be manipulated. All right. So in such an area like this, like I'd said, I'm not looking to get involved, and I do not encourage you to get involved, because you're likely to take a loss. Right? You're likely to take a loss. Let's look for another trade that can hopefully sort of illustrate what we've been seeing over here. So maybe this one. Let's remove drawings. Okay, so this one is even really beautiful, because as you can see, we've got trend line that's over here where price is respecting this trend line so nicely, and people will obviously be expecting for price to do the simple thing, come back, respect this trend line, and push upwards, right? I'm not going to use the example of a POI in this case, but I just want you to understand why this then becomes a liquidity zone, because everybody has got stops under there. Now let's watch what the market maker does. Price moves up, comes in, there we have it. So let's just look at what happens just before the trend line is broken. Go to the 1 hour. What did I say? You get the pattern you've always been looking for close to your area of value. You get a nice rejection candle and nice engulfing pattern. You come in, you're like, this is what the book said I must do. As soon as the candle closes, you're in. You've got your stop loss right below there. Look at that. Look at that. You get stopped out. And they go very aggressive, very quickly against the guys who took buys at this trend line, right? And all of them know that price is supposed to go up. We all know price is supposed to go up. We think price is supposed to go up. And what do we see? We see price moving in the other direction. And it comes straight into this POI over there. That's where it comes in, rejects, and then bang, we see price moving up from there. So this is another example of why trendline liquidity is such a dangerous place to be taking, to be taking trades from, right? Even now for us who may have entered, let's say for whatever reason, you got an entry over here. Let's say for whatever reason, right? You got an entry, and then you see this happening. This is horizontal line liquidity over there, right? Let's just do that for a second. Let's just do it. Look what's happening here. These guys saw a breakout of the trend line. When they see a breakout of the trend line, what have they been taught? They've been taught that if price is moving up, and there's a trend line here, and you see a price breaking out, you must see a retest. Let me just combine these two, and you must see price tanking. That's what they've been taught, right? So obviously, this is exactly what happens over there. You've got a trend line, it's broken, price comes back. Let's remove this. Price comes back, you start to see that liquidity building now. You start to see that liquidity building, right? And you start to say, all right, a resistance has been formed. We know there's liquidity over here. We know there's liquidity resting above here. Why? Because there are guys with stop losses already that have been placed all above here. Because they strongly believe these rejections that these candlesticks are forming show that the sellers are coming into the market, and then they strongly believe now we're going to see price move lower. There's a trend line over here. The trend line has now been retested, and we're going to see momentum to the downside. They see the momentum, and they're like, wow, we're in for the money. We're in for the money. This thing is never going to stop. Others who may have been late for this, for this setup, I think this nice and beautiful rejection one more time. They're like, that's it. Let's work on a trade, right? Work on a trade. put your stop loss over there. Let's just clear that out, right? And then you wait, like I'm in the money. What has just happened? What has just happened to the guys who've got the orders, stop losses right here? What has just happened here? They're getting stopped out, right? Almost immediately. The guys who like re-entries and whatever, they get stopped out. And it's so strong. The move is so strong, it kills them. It's so crazy, right? Let's keep playing and see if we get another opportunity to see liquidity playing out again. So we had this equal high liquidity over there. Let's play, watch what the market is doing. Now, if you've learned how to draw trend lines, it should be effortless that you can see these kind of things. You must practice to do it to a point where it's so easy to see what's happening, right? And you need to start thinking like the retail trader who isn't very much acquainted with the market. So obviously now you can already see that more trend line liquidity is building over here, right? You see that. See trend line liquidity. I've got relatively equal highs here forming. Again, another double top, right? That's liquidity, right? So what are the general concepts that people have been taught about how to trade these kind of things, right? We've got people who are taught that if price breaks out, we're just going to wait for a retest and then we're going to move lower. Then we've got guys who believe that this is a strong area of support that's been just been printed up, right? So they mark their zone. They're like, price is clearly rejecting from such a zone as this one, and we can expect price to tank lower, right? So without too much detail as to how we would apply this in our trade, obviously what we can see is we've got a strong impulse, and then now we're beginning to see some sort of a corrective move forming. But because of how liquidity has built up at the top and liquidity has been built over here, and now we know that we don't want to be involved in such types of corrections, we want to wait to see what the market is going to do. We want to wait to see what the market is going to do. So obviously in this case, we've got the guys with who trade trend lines and waiting for candlesticks. They get some sort of a confirmation. This is a rejection. Let's see. Okay, let's go back to the 4-hour and see what's just taken place. Right, so they get the rejection, price moves up, comes in to further validate that this is a support or a resistance zone, right? This is a resistance zone, and then this trend line is broken. So the guys who believe that when price is coming here, they can buy again. Let's just do that. So the guys who believe when price comes back to this trend line, they've seen it, they've cracked the formula of the market, price is going to come back again, we're going to buy, and this market has been buying and buying and buying, we're going to buy forever. Eventually, when the market comes down, let's go to the 1-hour chart, right? When the market comes down, take them out. They're given this nice, beautiful candle over here, which looks like some sort of a rejection, and if they are obviously not the guys who've got enough or sufficient confirmations to enter trades, they get worked out almost instantly, right? So let's look at that from a 4-hour chart. Then voila, trend line liquidity over here has just gotten what? Manipulated. It's just gotten manipulated. The story was building up nice and fine in the past, but we see now that this liquidity has been manipulated. So we know there's guys who are going to now wait for a pullback, this trend line, and then they're going to wait for a sell-off. Where are they going to put their stops? Where else? Over here. Because this zone has shown us that it's failing to be broken. So we can just put our stops right above here, and we know we're going to be fine as long as we wait for the retest. We lost this trade where we were expecting to buy. Maybe we made money with the first trade over here. They made money. But now they're like, no, obviously the trend has changed, right? We've got guys here who at support who are in the money, and they've already made money here. They've got their stop losses above there. We've got the guys who are late, who are obviously waiting for price to give them a pullback one more time. They're like, nah, price is going to come back, and so on and so forth. What do we see? Price comes back, and it happens. What happens, you may be asking? Let's just take it back over there. Ever so slightly. Ever so slightly. This wick comes above. If you had your stop loss resting anywhere over here, the chances that you got stopped out may have been high. And you see how aggressive this comeback is. And then you see you've got a small pullback, and then price sort of comes, works you out. If you were not stopped out, then you're happy because you're like, no, it's fine. My stop loss was even higher, so I'm still fine. If you had a POI that was here, you were like, nah, I didn't get triggered into that one. It's still fine. Then what happens? It comes back enough times to tell you, bro, I'm going to kick you out of your trade. It comes enough times to tell you. So when all of this is said and done, how many traders have been manipulated in this market? How many? How many traders? Right. We've got the guys who, number one, expected price to hit here and to hit their TP, which could have been a few pips off right there. Then they didn't see their TP hit. They see a strong rejection. They kicked out right at their trend line because they've got liquidity resting in these areas below. So those guys are kicked out, right? Because they come in and then they're like, we're in the money, got a stop loss here. We want to hit TP right over there. The TP is missed by just a few pips, unfortunately, and that's sad. Some of them may have collected partials. Some of them may have been already in the money. Maybe they didn't let the price hit the exact high. If they did that, they're in the money, and that's fine. We've got guys who came in a second time. They're like, okay, at this point, we're going to get our entry. They get that 1 hour candle that we saw. They place a buy. These guys get totally annihilated because price doesn't even go in their direction. It pushes them out of the trade very, very aggressively. Then we've got the guys who believe that, no, you know what, with price building up momentum, we've got a breakout, we need a retest, and then we're going to push price lower, right? As soon as they see this momentum coming in, they place their shorts. They're like, nah, we're in the money. Whether they have their stop loss right above over there, I don't know, or they have their stop loss over here, we do not know. All I know is they get stopped out before the price goes in their direction, right? And when price goes in their direction, we've got guys who are like, nah, this price is already going even lower. Let's take another sell. When they see this, they take a sell, they put their stops above here, and then price comes back again, gives them an opportunity to get out of the trade, or inspires other people to take shorts who are seeing all these candlestick rejections. They're like, definitely price is going to go lower. The guys who are waiting for another confirmation, they see this candlestick. They say, this is it. We're now finally going lower. Then they get smacked out of the market. Everybody gets a loss in this trade, right? Everybody gets a loss for one reason or the other. But the reality of the case is, if you had seen that this was all a correction, number one, if you had spotted the trend line liquidity and the equal high liquidity over here, you'd have known not to take any point of interest that's at this level of price, and any point of interest that's coming along here. You would have known not to do it. You'd have known not to do it. Because as long as this line is anywhere near your entry, I don't know, I don't care which side of it, it's likely to be manipulated. Whether you think it's going to be a retest or a breakout or a rejection, chances are manipulation is going to take place in and around that line, in and around this line. And then for the patient guys, they then see that price has given them a good and nice solid direction to trade from. It's now told them what it really wanted to do all along. And that all of this was just liquidity being being generated. Okay, it was just liquidity being generated. That's it. That's it. As a trader, that's all you need to be seeing in the market. And that's sort of how you read the liquidity. Now, one last scenario is this scenario. Let me just use this box to illustrate a range, because we all see different things in the market, right? We don't also see the same thing. We don't need to, actually. So this is a range. This is a range. And the guys are like, nah, obviously we want to make sure we capitalize in the range. Why? Because price hit this high, came over here for a retest, gave us a double bottom, and it's been failing to break. Then it came up. By the time they see price coming here, they know it's time to buy. It's time to buy, because now what we have is a consolidation. We've got multiple rejections here, multiple rejections at the top. When they see price here, they're in for the buy. When they see price here, they're in for the sell. When they see price here, they're in for the buy. They see price here, they're in for the sell. Ooh, this time around, when it's that obvious for everybody, and there's a confirmation candlestick like this one, yeah, I hope you get me, guys. I hope you get me. I hope you get me. I hope you get me. These are the kind of things that you need to be looking for in the market. You need to be looking for them in the market. You can't afford to just be, hung up in your own strategy, looking at how you trade. Um, you have to see the market in a totally different direction. You have to see something that's, that's beyond what you know, that's beyond what you trade. You have to see how other people are looking at the market for you to see liquidity. And once you see the liquidity, that's when you know there's a high chance that you're going to be a winning trader. Especially if you're in the emotions, you're going to see this. You're an impatient trader. You're going to be like, I want to be taking shorts from this area. You're going to be getting manipulated after time. You're going to be taken out of the trade just when it's so obvious what's taking place. That's when you get taken out of the trade. And if you've been the guy who's obviously who made money when price returned this time and this time, I assure you, when you see this and all these rejections, you've doubled your lot size. I promise you. You're very emotional. You're putting all your money on the line. You see some profits. You even scale in because you're like, it's obvious price is going to come this low. All right, guys, thank you for bearing with me whilst I was ranting about liquidity. I'm too passionate about this because I lost too much money to this, right? Let's talk about Asia session liquidity, right? So this blue box here indicates the Asia session range, right, for the 9th of June. And obviously the Asian session has just ended over here. This is the low of the session that you can see, right? We've got double bottom liquidity over there, like that. You're going to learn to see it, I promise you. It's just going to happen. You keep practicing, you're going to begin to see it. So you've got double bottom liquidity. The session has ended right where this box ends. And then you've got the guys who are waiting. They're desperately waiting for the breakout, right? They're desperately waiting for the breakout. Oh, my bad. This is going too quickly. So they see the breakout now. They're like, okay, we've seen the breakout. The breakout is going to the downside. And they place their shorts in the belief that the London session is going to continue lower. That's their belief. They believe the London session is going to continue lower, right? For us, we see the double bottom liquidity over here. We know chances are these guys are going to get manipulated because there's stops that are sitting over here, stop losses that are sitting over here, and there's buy stops or sell stops rather that are also here. So everything gets triggered. As soon as it gets triggered, what do we see? Price pushes up back in the London session. Oof. And we see that people get taken out, right? People get taken out of their trade. Just like that. So obviously these guys with the sell stops and their stop losses were willing to place a buy for the double bottom over here, and they had this confirmation, or the guys who are trading Asia session breakouts, they both get manipulated. They see some money, and that's the end of that. London session starts, price pushes up, annihilates also the stop losses that are resting right above this Asia high over here. And then when that happens, the market maker wins both sides. They always wanted to take price up, right? Now they're the guys who say, when we see a breakout of this session, which is the London session from the high, we're going to place buys. Okay, so they come in, they see the breakout, they place their buys, they believe the market is going to continue to go up, right? They've got their stop losses right below here. They say the market is going to continue to rally for whatever reason. Oof. Look at that. Almost instantly, they're in the wrong direction. Why are you even trading this? Do you understand price action? Do you understand what's going on in the market? Right? And almost instantly, when these guys get kicked out, we see that the London reversal is in place. Right? London reversal is in place. So these guys get stopped out. And then when the New York session starts, this way, it just reverses and price goes lower against the guys who believed the trend would continue higher. All right. So this is sort of what happens when you're trading in the market, and this is how you can identify the manipulation of Asia liquidity or session liquidity in the market. I hope this has been a good session and you managed to learn one or two things about liquidity and how to watch for liquidity in the markets. Cheers.